Hello friends, welcome to Uptrending Shares. Friends, you know that share market all over the world except US is falling. There are various reasons, and when market will pick up, no one knows. And I must tell you, people on the TV, some so-called experts are shamelessly telling market has bottomed out, market has bottomed out. It has not bottomed out, nobody knows it. Let us now check whether the market has bottomed out or not on certain criterias. Friends, I must tell you that share market, there are several criterias which impact the share market very well, like inflation, Fed rate cut signals, corporate results, corporate guidance, consumer confidence, and geopolitical situation. Now these we are going to examine one by one, and let us see where we stand today. As I have said, predicting market is very difficult. Today we find that so many stocks in India and abroad have done very well, but technically the stocks actually are falling down. So this is actually the great story. In spite of strong fundamentals in some stocks, they are still falling. And this is what is making the situation very complex world over. Now, under the circumstances, friends, what to do when it comes to Fed signals, rate cut signals of the US Fed? This is actually very important because at present US effective interest rate is 4.58%. When fresh rate cut will happen is anybody's guess. Everybody actually is just speculating. Rate cut will happen in December, rate may happen in March, but nobody exactly knows because this depends upon various financial data in the US market. Another very important criteria of rising or falling in the share market is US unemployment data. Friends, you can see here, when the unemployment rises, whenever the unemployment rises, the market falls. Whenever this is actually blue line is unemployment in US, whenever it is falling, market will go up, and whenever unemployment is rising, the share market actually falls down, and this actually impacts our market also. So in nutshell, if we have to say, the stock market rises with decrease in the employment data or employment rate in US, and see what actually happens is for say couple of weeks, couple of days or weeks, it actually impacts Indian market as well. Then is the corporate results and corporate guidance. Now this actually is extremely important. Why? Because if the company has performed well, then what happens is that company will give you good dividends. They will come with the right issue, stock splits, bonus issues, buys back, and so many other freebies to the investors if the corporate guidance is good on the basis of corporate results. And then comes is the consumer confidence. If the confidence of the consumer is low, now the stock market actually falls, as we have it right now, because consumer confidence, as I have said, depends on the several factors. It is inflation, it is Fed signals, it is corporate results, guidance, consumer confidence, and geopolitical situation. So when these kind of things are happening, who can predict? Even the best of the best expert in the share market also cannot exactly predict what is going to happen in the near future. But still we have one data which will convincingly guide us whether the share market has bottomed out or not. This we will see little later. You can see here, when the guidance is more, what people do, when the consumer confidence is good, what happens is, first thing that people go is to buy is the automobile. Then they fall on the buying houses. Then they fall on buying various other things. Travel increases. Fine. So this all goes when the consumer confidence is high, and when the consumer confidence is low, all the purchases, whether it is in the consumer good or it is in the houses or it is in the vehicles, all of this actually comes down. Friends, corporate earnings. Now, this is something which is very great. If the market actually is normal, means there are no issues in the market, then what happens? If the corporate earnings are good, these are the corporate earnings are good, the share market also goes up. If the corporate earnings are bad here, the share market also comes down, and similarly it goes up. So this very clearly shows that consumer confidence depends upon the corporate earnings. We have seen this here. Now friends, when it comes to corporate earnings, I think as far as India is concerned, we have done reasonably good in corporate earnings. Although some of the experts are saying that we have not done well, we have not done well. What we have not done well? We have done very well. Today there are more than 80 stocks which have done exceedingly well, and there are about 20 stocks which have done fundamentally and everything, all super class stocks, the super class results they have produced. And some of them are HDFC Bank, Axis Bank, BSC, MCX, Anand Rathi. These BSC, MCX, Anand Rathi are all brokerage firms. They are doing very well. Not only that, you have Kalpataru projects. They have done beautiful, wonderful results they have produced in Q2. Cummins, VRL Logistics, Nelco are few of the stocks which have produced exemplary performance. But in spite of all these, the stocks are really not rising because the overall sentiment actually, as I have said, is not good at present. Other factor which impacts the rise or fall in the stock market is actually the geopolitical stability. Now you know that Russia-Ukraine war is going on. Let's hope so by January, February or March this war gets over, and once this war gets over, there is likely to be the political stability in these two countries. Russia of course is stable, there are no issues, but Ukraine actually is in a very, very bad shape. Another war situation or geopolitical situation is Iran-Israel war. Now, Israel war actually seemed to be unending, but let us hope that with change in the leadership in US, actually this war also comes to an end. So once Russia-Ukraine and Iran-Israel war comes to an end, we could find that yes, geopolitical stability is there. Now, what is the bottom line? Where do we see actually the market has started rising or not? But before that, once again I make a very strong statement. In short, no one can predict with certainty when the stock market will pick up. However, by monitoring key indicators, trader can get better sense of broader economic environment and investor sentiment, which can provide clues as to whether recovery is on horizon or not. Friends, but you see, this is again a statement only, and as I say that these experts are, I think they are dishonestly saying that buy at this level, buy at this level, buy at this level. This actually does not serve any purpose. Only purpose serves that investors get trapped into such expert advice, and finally what happens is they end up losing money. So let us check where is the bottom line. I think, in my opinion, one of the surest way to find bottom line is to examine rising Nifty and Bank Nifty on weekly charts. Friends, my experience tells me that unless until you see weekly chart Nifty and Bank Nifty rising, there is no point in buying any stock at present. Friends, rest is up to you. Thanks for watching this video. Please like, share and subscribe if you have liked the video. Thanks a lot.